as we go into the idea of cryptocurrency, I want to first of all put down some of the basic fundamentals of what we're engaging in. Cryptocurrency is an investment tool. It's a super high risk investment tool. And really, if you're going to go into it, a couple of things you have to know. First of all, it should not be your entire investment portfolio because it is risky. So I'm going to explore some of the basic investments and then go right into the aspect of crypto as you progress in the class. Now, that being said, keep in mind, I am not a formal financial advisor. I'm talking about the topic of cryptocurrency and the aspect of investments in a general term. Do not take my advice and go ahead and invest everything according to me, because I am not a formal professional making money selling a product. I'm teaching something about investment. So that's my qualification and my legal disclaimer in the process. But let's talk about the aspect of investment. One of the people that I admire the most in the world of investments is Warren Buffett. He said this: if you don't find a way to make money while you sleep, you'll work until the day you die. That's pretty good advice. So the reality is, I would prefer to sit down and make money while I'm sleeping if I can do it. And investing is a really good pathway for it. I think we need to temper, though, with some common sense and look at what the traditional aspect is and how the world has changed. Because, by the way, the world has dramatically changed, and there's a lot more options besides the basic 3 classes of investment. So the biggest thing is called diversity. Investment diversity, it's a strategy where you don't put everything into this sector only. Even if you bought 10 technology stocks, companies that develop technology and sell it, the issue comes down to that market goes up and that market goes down. You need to have diversity. Technology stock, mining stock, diversification over in European stocks, plural, Asian stocks, South American stocks. You can go by region, you can go by different companies, what they do. So it depends on what you're looking at and watching the market go up and down. A lot of that is what investment is all about. So we really normally talk about 3 common asset classes. We talk about stocks, bonds, and cash, or cash equivalents. Now, those are the 3 basics, except the world really has gone well past that. And I'll talk about some of the severe limitations that those have. But stocks, they tend to go up and down, and you'll have a teeter-totter effect a lot of times between stocks and bonds. Not all the time, because the current market at the time of this recording is so bizarre and weird. We're on the edge of a recession. Maybe, it just depends who you listen to. The formal rule of recession: 2 shrinkages of GDP quarters in a row, you have a recession. We've gone through the formal definition of it. People argue about it, trying to make themselves look better instead of acknowledging the reality, in my opinion. But the reality of the stocks and bonds, you do have a countercyclical usually, but we have seen the stocks and bonds market go up at the same time. It's almost unheard of, and they've sunk at the same time, which would point to really uncertainty in the economy with no idea of what's going on at all. With that, a lot of diversification is a big deal. And when you look on an investment portfolio, which is a range of different investments that you might have, even if it's a small portfolio, you want to have some type of diversification in it. So now we have a new critter out there called ETFs. Mutual funds have been around for a long time, and mutual funds are very safe. Mutual funds, you have a whole series of different stocks that the mutual fund buys, and you buy a share of the mutual fund. It works really well. Real estate investment isn't confined to a house or to an office building all by itself. You can buy different segments and portions into. You just go on the online. Real Estate Mogul is out there, and I've been looking at that myself in the aspect of buying a portion for an apartment complex for $5,000. I'm a partial owner in that aspect of it, and it looks like it operates on a subchapter S investment aspect of it, or maybe even a C corp. But with that being said, you have different aspects out there that really the traditional categories of 3 ignores, and I think that we're past that nowadays. There's a lot of investment options, and you get to explore them because it's your portfolio, and really you want to make sure you have a diverse application of it. Diversify it. If you buy stock, make sure you don't buy stock all in one sector, one industrial sector. Buy it in multiple sectors all over the place to help you sit down and focus in on that. If you want to have something more stable, put bonds in because bonds provide interest to you, and that interest is stable and it's required on the face of the bond. It'll tell you how much it pays on an annual basis. Or you could buy stock that has traditionally delivered dividends for you if you want to have income flow out of the stock. There's a lot of different aspects of it. If you're going to go into those markets, there's a lot of automated AI stock listings that will provide that to you, but you also have humans out there, stockbrokers, and some of them are absolutely brilliant about it. Although I always wonder why, if you're such a brilliant stockbroker, why are you selling stock to other people and not just buying it yourself? I always kind of wonder about that. So you have different aspects. But of all things, diversification, it depends on your personal risk tolerance. It depends on a case-by-case basis. What may be comfortable to me may not be comfortable to you, or to this person, or to this person, or to this person. It just depends, and you need to determine your own diversity, but make certain you don't put all your eggs in that one basket. Stocks, you have the whole thing, but really when the economy goes volatile, stocks tend to go volatile as well. When you have a cooling economy, then the stocks tend to go down. And at the same time, people turn to look on bonds in the aspect of having the inverse relationship with stock. And usually that's the case. When the economy really goes bad, people turn to precious metals an awful lot, and precious metals becomes a safe haven as well. But even then, with the economy we've been having, you can't count on anything being the set rule, because sometimes people like to break the set rules just because they can. So it depends on the cash. Here are a whole series of things that go well past those initial aspects of the three traditional asset classes. Mutual funds. Explore those as part of your package overall. ETFs, exchange traded funds. This has really showed its head within the last 5 years in the aspect of being something that's really fabulous out there, where you have a group of stocks that and securities in a specific area. You just buy into this fund over here and this fund over here, and all of a sudden you have a nice diversity of stocks all by yourself, very similar to having a narrow focused mutual fund. Cryptocurrency, which is our topic, there's over 12,000 cryptocurrencies out there. That's a huge, enormous diversity for you to choose from. And you'll have everything from good, solid returns on cryptocurrencies to all kinds of crazy returns in the process. So you want to focus in on what's best for you. So you have NFTs, non-fungible tokens, which actually is an art, digital art, and frankly, that is classified as a type of cryptocurrency. Then you have regular art, okay, which is really a positive thing, and people are buying art and hanging canvas in their homes and using that as an investment, and actually the return rate for it has been actually relatively spectacular. Okay, real estate investments, it depends what you buy. Sometimes you have different aspects of it, or even the business. The New York Stock Exchange, it's open a whole 32 and a half hours a week. Maybe if they don't feel like closing it down for a special holiday or something else. It's only open 1,690 hours for the entire year. The world doesn't operate that way anymore. It used to all the time, and people can actually take a rest. When I take when I do my early morning walk with the dogs at 5 o'clock in the morning to 5:30, I'm out there and there's people in the neighborhood. They have the light on in their office and they're hammering away on computers. At least 3 people that I know of that are already up trying to sit there and buy and sell stock. Some of them are 1 or 2 are day traders out there. You'll see them working on that whole 32 and a half hours a week. The crypto markets, though, they're open 24/7, 168 hours a week, or 8,790 hours a year, just like the rest of the world. Crypto is much more active, much more volatile in that aspect, and you can become rich one day and poor the next, or poor one day and stay poor, or you could stay rich and get out at the right time. Crypto is much more volatile, but it also operates the way that most people do. But are we limited to passive investments only? Franchise coach, the idea of buying a franchise and running the business, okay, that needs to be considered as part of your portfolio. Do you want to ever become an entrepreneur? Can you buy your own franchise? By the way, look at the numbers there. 30 to 50%, that is far higher than the bulk of any kind of passive income you could ever possibly generate, unless you spend really almost your entire full-time life working on your passive investments. 30% return rate on a typical franchise is a lot of money. If you put in $500,000 of that, you're going to have a big return when you start developing that franchise further and further. If you start cranking in $1 million revenue a year, okay, and you start earning 30% of that as profit, that's a nice, good, profitable margin on that money. Because if you put that money into any kind of investment, you would probably not be getting even close to that return. That is also something to consider. Elon Musk said this. He says, fewer people should start careers in finance and law, instead focus on innovation. I don't know about you, Elon Musk, he's up there in the top right at the moment of this recording. He's the richest man on planet Earth. I think I should listen to him. Him and Warren Buffett, those are kind of the people I have on my team. And the aspect of him being innovator, it's kind of hard to sit down and not say Elon Musk is not one of the most innovative people of our time, maybe of this entire century. Love him or hate him, either way, Elon Musk certainly is out there, and he focuses on trying to develop the future of mankind. But he does do some passive investments in the aspect of especially cryptocurrency. But of course, Elon Musk is noted for being able to take a risk and do very well in it. So investment diversity, pay attention to what's out there. One of the resources I use, right, I do some of the information from here, is NerdWallet. I recommend it. I'm on NerdWallet quite a bit. That and Investopedia, those are my two favorites. Okay, but investments, you can make or lose a fortune. It adds value to your bottom line, but can also add long-term value. Your own business, you can also do the same with maybe even more value on investment diversity. Look at the combination of different aspects of portfolio. You want to have some things that carry little risk where your money is safe, anywhere from a bank account to actually some real estate, because real estate is kind of the old standby for good, stable investment, all the way to the stocks, bonds, and all the way out to cryptocurrency. Have it part of your investment diversity, so that way you can grow your wealth personally on a regular basis to the way that you want to and that you're comfortable with. Consider that combination. Look on making certain that your money that you want to have long-term is developed well, especially using the concept of investment diversity. Take care.